Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to rip through Twitter, see what people are talking about. It's going to be financial topics, commodities, or wealth building related. And I'm going to dive right into it, give you my financial opinions as we go. And again, if you want to follow me, it's at finding_finance, or you can follow me on finding-value.com. We still have that happy birthday coupon code, that 50% off, if you're interested in joining for the first month. So, coming in here, I want to go through this thread. It's a red pill. He says men are happiest when they are making money, owning businesses, buying massive land, having a home gym, and building a big family. Men in your 20s and 30s, read this. So let's see what he's got to say. Says you need money. Nothing will improve your life as much as money generating business. Money gives you the ability to walk away from people and situations you don't like. Money gives you options and power. Spend most of the time making money, learn the game of money. One thing I will say is money does give you the ability to walk away from people and situations you don't like. That is, I said this before in one of my earlier clips, it's coming from a position of strength versus a position of weakness. And in weakness, you have to take whatever is given to you, which can be the big crap end of the stick. I'll just say that. Two, learn how to sell. Everything in life is a sales pitch, and I totally agree with that. This ranges from dating, cashing out on a business, or making friends. You are always selling something. If you learn to sell like a pro, your chances of success are at least 80% higher. Cultivate this skill. I do a lot of interviewing with people, and learning how to sell yourself is a very important attribute. I would say being able to speak well and fluently, being able to sell yourself, being able to speak in front of large groups of people are all exceptionally good to, uh, I'll say, exceptionally good to master that skill set. If you can sell yourself or sell whatever you're trying to sell, the product, whatever, you always get what you want because you're always closing the deal. Here's one. It says spend time in the sun, at least 30 minutes. Unbelievably peaceful habit. If you do this every day, you'll increase your vitamin D levels, connect you with nature, decrease cortisol, which is um, a stress releasal that's increasing testosterone, making your skin glow. Make time to sun your balls. It says, never trust society's advice. Society and governments want weak, submissive men who are easily controlled. They can't benefit from strong, self sufficient men. Reject society's advice and beliefs. They want you to be weak. Create your reality. Stay away from mainstream media. Those are the people who told you that meat causes cancer, prescribe you to jerk off and tell you that you can't make money online. Those are the peons used by government to control weak spirits. Masculine men are hard to control. Recharge yourself daily. Take constant showers, 30-45 seconds of cold water, followed up by 30 seconds of hot water. Repeat the cycle 5-6 times. Better than caffeine. You can try this. Works for me every day. Practice this, lift, provide financially, meditate, respect everyone, learn how to fight. These are essentials if you have a pair of balls. Do these consistently and watch yourself transform into a top tier man. Be strong. Appreciate your parents. They are the only people in the world who genuinely hold your best interest at heart. The only people in the world willing to sacrifice everything for you. They're willing to starve just so you can eat. Love and respect your parents. It's Saturday wake up call. Son, stick with me and you'll learn more on business strategies, mental frameworks, relationships, social skills. Let's meet next Saturday for more. And speaking of Saturday, we do have a Saturday question and answer session for those that are platinum members on the website. So coming on down, there are basic, we're going to show more right off the bat. There are three basic reasons to save money. First, we save for an emergency fund. Second, we save for purchases. Third, we save for wealth building. Purchases and wealth building are fun, but we can't do any of that until we cover the basics, the emergency fund. This is savings account set aside and never touched except for emergencies. You'll need to define what makes up an emergency for your family too. Let me give you a clue. A new leather sofa or vacation is not an emergency. The emergency fund is your protection against life's unexpected events, and you are going to have a lot of them throughout your lifetime. They're not really unexpected if you think about it. You know they're coming, you just don't know when, what, or how much, but you can still be ready. So, speaking of emergency funds, I don't really have a large emergency fund, and I'll tell you why. I don't really need it. I've got a pretty good sized individual account that I can get money from with less than a week. I've got a huge health savings account. If we have a health problem, I can hit that up with a lot of money in it. I have a bank account and I don't have like massive amounts of money in there, but it's a decent amount, enough to cover any expense. I've got multiple cars. If a car goes down, I have another one that I can drive immediately. So I can fix it myself anyway, and I've got the time to do it. Uh, I don't really have that much expenditures. So I don't need a huge emergency fund. I can obviously cut back expenditures that are not needed. So I could go pretty bone dry on the expenditures if I had to. But I've got a lot of buckets I can hit that are readily available if I have to hit them. Plus, it depends on how much money you make on a monthly basis as well. The more you make, the less of an emergency fund you necessarily have, especially if you've got 4 or 5 revenue streams. Because if one revenue stream kind of falls offline, you're kind of like, it hits you, but it's not really a big deal because you've got 3 other revenue streams or whatever coming in. So the way that I would view this is build your income, build the income. That could be through dividend paying stocks. That could be from whatever income you're getting, your main source of income. Build that if you can, and build side hustles, side gigs. Um, Build whatever you can. Keep building and building and building and increasing that income. So yes, an emergency fund is, I would say, more important the lower amount of money you make and the more razor thin you are in terms of your expenses to your income. If it's razor thin, you got to really start to save money with a big emergency fund because you can't make it up with the volume of cash flow that you get on a monthly basis. So in my opinion, your emergency fund should be a direct relationship with how much cash flow you don't have on a monthly basis. If you're saving 40, 50% or more of your monthly income, you have a large buffer to kind of buffer you against anything. But if you're only saving 5 or 10% of your money each month, you may need to increase your emergency fund quite substantially. Cape spot rates rising amidst good activity, especially Australian. Transatlantic plus 17%, the last done reported. So I just wanted to look at this dry bulk shipping. You can kind of see the cycle as it goes up and down through the years. It's a low point in March or April, somewhere in that range. And then we get another low point in August, September. So we could come back down for a little bit at some point, August, September timeframe. But I think a lot of these dry bulk shipping rates are incredibly low and compared to history. I think we're going to have a pretty strong dry bulk um, day rate coming out maybe a few years from now because we're just not building the ships, and ships are going to get older, they're going to fall off, and there's just going to be less of them. Looking at numbers, it seems like we are headed towards a great high season in dry bulk shipping. I know I don't talk about dry bulk very much, but we can see China steel production's up 1.7 year over year. China steel inventories are down quite a bit, 22%. China iron ore imports up 8. Coal imports up a ton, 100% almost. Soybean 14%. Brazil iron ore exports 10%, and Australian iron ore exports 2.3. It says with summer doldrums in full swing, the Cape spot market has remained in a tight range, reflecting the uninspiring charting activity and a stable, normalized export rate when it comes to the major dry bulk commodities. Silver miners, SILJ on the weekly, looking fantastic. We could be starting a new uptrend in SILJ, so that's looking good. We've got commodities, might actually be making a bottom right as the economic consensus forms that disinflation's back. Yeah, this is breaking the downtrend here from 2022 down to 2023. There's your downtrend line break, and it's starting to break higher. Commodities are looking, I think, fantastic. Speaking of new construction, we have fabulous data-rich conversation with Dietz Econ, chief economist at NAHB, and he does talk about housing starts, the demographic that's a larger demographic coming through, and how we're going to have elevated housing starts for a good long time. He thinks maybe even towards 2030. And this is what he does. He's got a PhD in all this, economics or whatever, and he's been diving into housing starts and stuff. So it's a really good listen if you're interested on his opinion. U.S. Treasury receipts have come unhinged, says Luke Roman. It's just not sustainable fiscal situation with U.S. Treasury receipts running down 20% year over year. And this is where they could come into a problem. If the market slows down and they don't get the inflation, their revenues decline. And with the declining revenue, there's a fiscal situation that we run into because their deficits become gigantic. And we're going to have to print more money to cover those deficits. DNN, something very special here. We've got a long-term downtrend line. This thing's ready. Well, it is breaking out right now. And we could see a big run in a lot of these uranium companies. I know a lot of people, what they do is they wait for the run to already occur. They look at it and say, oh my gosh, it's running. I better jump in. What we do is we want to buy patterns. We don't want to necessarily be chasing. There's a lot of falling wedges in uranium right now that we've broken to the upside. I think it's just a matter of time before uranium runs. That is what I would consider to be the ideal buy points. DNN, another one that's zoomed in, or actually this is zoomed out. He zoomed out a little bit more. You can see the breakout and a potential move. There's obviously should be a moon up here. So he's got, I don't know, $2.90 or something like that from $1.29, what he's projecting. This says, wow, this is U.S. gasoline storage. You can see that we are lower than all the other years in terms of gasoline storage. We continue to pull down that gasoline storage in inventory. This is investors should brace for a second wave of inflation, as was the case in the 1950s and 70s. And this is an important thing I want to read to everyone. It says, echo inflation waves are a product of maths and the economic cycle. First, base effects work both ways. Base effects are disinflationary in the past 12 months, but they will turn inflationary next year as prices will be measured against a lower base. Second, the disinflation of 2023 contains the seeds of which reflation of 2024 personal income grew by 7.4% last month, far outpacing inflation of 3.1%. With income growing by 4.3% in real terms, strong demand could force prices to rise in an economy that is already running above potential. So that's what we've got there. IEA oil and products weekly inventory report down about 1 million barrels in crude, up or down 2.9 in Cushing, down 1 million in gasoline, and about flat in distillates. We've got oil here. It says, how can people call for peak oil in terms of price when looking at this simple chart? We've got an amazing chart here, a breakout, a retest. You know what I do on those retests, guys? I buy those retests, and oil looks absolutely fantastic to roll higher here. It says, nothing changes sentiment like price. So we've got the guru here, Graham Stephen. It says, how do you use the 2023 market crash to get rich 6 months ago, 5 months ago? You will regret buying stocks in 2023. The worst is coming. 2023 reset 3 months ago. The Fed just crashed the market. Major changes explained. As the price increases, how to get rich in the 2023 bull market 1 day ago. He is one of the reasons I started a channel, because he continued to say that we were going to crash in the housing market. And that was in 2020. I said, yeah, right, bro. There's no way we're crashing with the inventory levels where they're at in 2020. Another guy that was also calling for the crash was Meet Kevin. Meet Kevin was also talking about a crash in the housing market in 2020. And I was like, I got to start a channel. These guys don't know what the hell they're doing. And it looks like they are holding up to that opinion. Total vehicle fleet remains 98% internal combustion engine powered in 2023 as consumers prefer the convenience and energy density of gasoline and diesel. Growth in the total fleet means that ICE vehicles rose materially in 2021 and 2022 despite increased EV sales. One thing people say is they say, look at the increased sales of electric vehicles. Problem is, we sell a heck of a lot more vehicles on a yearly basis than what electric vehicles get made in total. They can't even cover the growth of the amount of vehicles sold. I think the amount of vehicles sold in a year is 75 million vehicles per year. I think the total that some of the EVs are selling is around 30 million or something like that, if I can remember correctly. And obviously those numbers are changing and growing. But I think we are going to be running on oil a lot longer, even for transportation use. That is not including all of the other things that we use it for, which is about 75% of non-transportation. So oil is used for 75% as non-transportation and 25% is used in transportation. Says lots of laughs. Not only did 100 trillion USD update its stock to flow model down so that the current threshold is 100K rather than 350K, but it's also massively underperforming the new S2F model. Stock to flow is absolutely debunked on Bitcoin, in my opinion. The only thing that I will say in terms of stock to flow is I don't think it really matters because what they need is money to continually increase in coming into Bitcoin. If money flows out of it, it will die. It will come back down and go down below the cost curve, and it will die because mining will cease to exist, and then the price to mine it will go exponential in relationship to the price. If the price continues to fall, you'll have fewer and fewer people willing to mine. And I know that, there's a difficulty adjustment. I don't know if that's going to work. And I brought people on before that, and I hope people will disagree with it, but I am pretty sure the people who disagree with it, their arguments do not work. They are not legit arguments. Silver demand has exceeded supply by a large margin. This is the silver deficit. As you can see, we went into a deficit 21, 22, and 23, and it is a large deficit. None of the industry influencers want to talk about this today, eh? This is all they've been yamming about for months. Hello. Notice what they and don't say in timing. And y'all paying these people for insights, wake up. So it says the rate of housing starts post largest month-to-month increase in a decade. That was for last month. This month, it was down a little bit from last month, but we're at 1.4 million, which is still above average. Average comes in at around 1.1, 1.2, depending on who you listen to. That Dietz guy says 1.1 million. But if we're above that, we are working towards the deficit. And he says it's going to take about till the end of about 2030, end of 2020s, early 2030 to get there, about another 5, 6, 7 years, something like that. And that's where I'm going to end it, guys. So that's what I've got for today. That's what we're seeing from Twitter. And we've got a wide array of stuff there: wealth building, emergency savings funds, dry bulk shipping, oil, all sorts of stuff. All right, guys, if you like the content, give me a thumbs up, subscribe to the channel, and we'll catch you later. This is Finding Value.